All right, so you're new to trading options and you want to buy your first option. So, for example, let's say you're bullish on AMD. You think it's going to reverse next week. It is down quite a bit in the past week. So, you do think the price is going to go up next week. So, in this case, you would want to buy a call option on AMD. And for your first option, most people don't actually win or make profit on their first trade. So what you want to do is buy a really cheap option. Just assume you're going to be losing that money because you want to see how the contract works. Because buying a call option is the right to buy 100 shares of that stock at your strike price. Yeah, and it's only going to cost you a fraction of the price. So, for example, you would want to do something like a very short expiration date. You're just getting your feet wet. It doesn't matter if you're losing a few dollars. It's just so you can have a nice learning experience. So, what I would recommend is doing something a very short expiration, as we said. So this example is just gonna be a weekly option, July 8th, expiring this Friday. And we want to do something that's cheap, as we said earlier. So something that's pretty cheap, but is gonna be affordable for you guys. Is gonna be something like an $80 strike price for $29. So when you're investing, when you have um, like a few $1,000s in your account, which is really what most people start with, you can afford to lose $29. It's really not that much when it comes to stocks, because when you're trading stocks options, you do need a bit of capital in order to really get the ball rolling and really to make some consistent income. With a few $100s, it's a little bit hard, but all of this is a learning experience. So what you want to do is just buy this option, and basically if there is a huge increase in price upwards, you can make actually a lot of money, because the further out of the money the strike price is. So currently the stock price of AMD is around $73.40, and our strike price we chose is $80. So at expiration July 8th, if the stock price is above our strike price of $80, we're going to be making some really nice profit, depending on how high the stock price actually goes. And the good thing is that it's unlimited upside potential, but it's going to be a small chance that we're actually going to be getting to this point because we need a pretty big increase in price, which is going to be about a $7 increase by Friday, which is going to be pretty lucky if that happens. But as we said earlier, we just want to get our feet wet. Just monitor the option contract throughout the day, see how it works, and learn from it. Thanks for watching.